All right, we are live 9 o'clock Eastern Standard Time. I would have come on a little bit early. This is not a television syndicated program. It's more like Wayne's World, to be honest with you. If you guys do have me loud and clear, please hit the thumbs up, and I'll take a look at the first thumbs up that I get here in the community. Please let me know that I'm coming through all right. Yeah. This is going to be fun tonight. Awesome. Obviously, a ton of stuff to talk about. I do have some very serious stuff to talk about, really aimed at if there's anybody in the audience that's joining the Independent Investor Channel live stream for the first time. Certainly want to hear my take on the pulse of the stock market right now. I'm currently not on the bandwagon with everybody thinking that the stock market is just going to continue to the moon, going up every single day. It's nice. It's a nice relief for the last 3 months. Really, that's kind of what being an investor is all about. You've got your ups and you've got your downs. I'm going to try to be as interactive as I can with the live chat. You guys need to understand Google doesn't keep up, or YouTube doesn't keep up very well with your guys' comments. So it actually helps to kind of lay a good foundation of comments in here, and I can hit those kind of in order. But I want to try to interact a little bit more with you guys, as I typically have a few points of interest on the board that is really aimed at helping young investors that are getting involved with the stock market at the, for the first time. And I just think we need to approach this stock market with some caution. All right. But we will get to that. I want to address the first comment of the night here. I've got Matthew Meyer, first comment in the live stream here. Looking forward to a feed tonight, Ryan. I'm sure you'll come out plenty fired up. I'm typically always fired up by nature. I love life. There's no doubt about it. I'm a human being. I make mistakes like anybody, but I also have a lot of successes, and I don't trudge forward from day to day with fear of making a mistake. Absolutely not. I'm sure I'll have plenty more in my life, and that's totally fine. But I've got Victor Hernandez right below it. Yes, sir. Glad to see you're going live. Your research and knowledge is pretty appreciated. Keep at it. I will say this. Okay. I typically really do represent a band of community that are just kind of regular working class people. All right. So I think I kind of understood a little bit. I've taught over the last 2 years on a lot of things, and I've thrown out the principle of wealth preservation. And I really wasn't so sure if the message was being received. I mean, I would teach it knowing the importance of it, to acknowledge it, and it was amazing to me, some of the feedback that I got back over the last week, kind of reminding me on the principles of, we're in a new era of investing now, and to be able to really seek out those opportunities through wealth preservation, it's very, very important. But I will respond to Victor, who's talking about a wealth of knowledge. The stock market is an interesting place because you're going to get a lot of your wealth of knowledge, as you put it, by being an investor year in and year out. That's where it's going to come. I've got one thing here. It's one of those odd things where you're actually provided the test right up front. All right. You don't get to go through the seminar and then the lesson and then 8 weeks of curriculum and learn it and then take the test at the end, hoping to get a good grade. Investing doesn't necessarily work that way. All right. You can prepare all you want, but it is inevitable that you will, in fact, have mistakes along the way. All right. Now, I'm going to be addressing those new investors. Very, very important to understand if you're looking to get involved in the stock market. There's a lot of different things that you can do in preparation, all right? And you can prepare, enter the stock market, and 6 months down the line, this market gets volatile again, and you hadn't prepared enough. And it's going to be that time that you're going to be tried, true, and tested to make sure that you've got the fortitude to follow through, all right? But we're going to talk about some things that you can do now free of charge, all right? We've got the products, we've got the accounts, all right? So there's really no excuse if you're a new investor out there and you're interested in the stock market. Again, 20s, 30s, 40s, 50s, 60s, and above. I don't discriminate, okay? If you want to get involved in the stock market and you're in your 50s, 60s, I'm all about it, all right? But there has to be some sort of acknowledgement that the products that are going to fit for you are going to be a little bit different than the products that are going to fit for a young person that may potentially have a longer horizon. All right. So, and you may have more opportunity a little bit older in life too. But the knowledge, I'm glad you appreciate it. But I tell you what, the community is really the strength and core of where the knowledge comes from. We've got folks out there making some mistakes. We've got some folks out there having some successes. And this is kind of a focal point where those ideas can come together. And I've learned more over the last 2 years than I ever learned in the previous 5 as a self-directed investor, right? Ideas get brought in. It's like a big think tank of information. That's why we come on every single Friday and talk live stream about this very topic. Because again, I know there's people who make their way into the live stream. Furthermore, I know there's people who tuned into the live stream after I've posted it to YouTube looking for that little piece of information. And if they trip, fall, and end up in the Independent Investor channel, I want to make sure that we provide them that opportunity, all right? Because the hardest part when you start investing is finding that little piece of validation and motivation to get started. So I really think the power in research and knowledge comes from a collective team effort. And guys, understand my pedigree, that's what I'm built on. I'm not built on doing it all myself, okay? There's a lot of talk right now going on about the importance of finding a mentor, okay? I will tell you outright, I've never had a mentor, okay? Never. My toughest critic has always been me. That's it. My toughest critic has always been me. I've never relied on the luck of tripping and falling over somebody who wants to take me under their wing and teach me the ropes, all right? I've always believed that I'm successful in my mind, all right? So I've never thought that I'm so poor and desolate that I need to seek out somebody who just has riches, right? And have them take me on and put me under their tutelage, right? But I think everybody needs that little initial spark and start, all right? So we're going to talk to the new investor this evening a little bit, but I am going to try to bounce back and forth. But I really appreciate you coming into the group. I've got Larry Massa in the group. Thankful and looking forward to tonight's show. Market is looking good. Take caution, all right? The stock market, if you haven't learned anything over the last 3 months, what is the thing that we need to start doing now? All right, start to acknowledge other areas of building cash. If you're putting new capital to work, try to start at 20% of that new capital to work, man. I'm not kidding. All right. In 6 months, a year from now, I think 2019 is going to be a good year. All right. I do. So enter the stock market in relative perspective. All right. Do not take your entire lump of capital and throw it at this stock market, especially running up as quickly as it has. I think we're up now 13%, I guess. Something like that. I don't know. I mean, it's up every single day. It's atypical. I just think it's volatility to the upside. It's the rubber band effect. I've seen this many, many times. I certainly don't get anybody coming on the channel telling me to sell all my effing stock, right? That's for sure. I mean, all those people seemingly are gone or have unsubscribed to the channel. I don't know where those people are. I'm not saying I told you so. I'm saying 3 months ago, I said, I don't know, right? I mean, again, I don't like to see my money fluctuate like that, but I sure as heck, I'm loving 2019 so far. I'm making a killing in the stock market. That's just part of being an investor, all right? You got to live kind of even keel a little bit and don't get so crazy when the seas get rough, all right? You want to stand even keel most of the time, all right? I got Gary Welch in the house here. He's going to the Harlem Globetrotters. I've seen them. It's freaking awesome. You'll love it. It's great. Matthew Meyer, he's going to stick around and bust my balls tonight, and that's awesome. I probably deserved a little bit. That's fine. I will say this about the content of the Independent Investor channel. I will say this. The content, all right, is held to a higher standard. It is. I get it. All right. There's people who are watching my channel that resonate with me as a blue collar worker, which that's exactly what I am. That's what I've been my whole entire life. And the criteria and the ethical standard is higher. I get it. All right. Very cool. I got Jerry Welch in the line here. I know, right? Laugh out loud. He's going to have some fun, have some drinks there. That's pretty cool. Matt says he made a play. I've got two folks in the group here who decided to gamble a little bit this week. Saw Sears, our great institution, at it went down pretty good. It was in the 40-cent, 30-cent range right there when they were legally going back and forth with the legacy, the main financier, and he put in a bid, upped his bid, and throughout the course of it, and they were very close to entering into bankruptcy. But a couple good wins in the group. That's atypical in the stock market. I congratulate you guys, 143% on 10 shares. That's probably what, maybe $3 or $4 of profit. So I congratulate you on that. That's pretty awesome. Very cool. Hey, Ryan, thank you for last week. So he got a few examples in the group here. You know, Brenny is a great example, and I don't want to speak specifically about his situation, but I will say this: a young person that is asking all the right questions and some wrong questions. But I tell you what, a person like Brenny, who's in the group here, doesn't care about asking questions, and that's what it takes. All right, that's what I've done, and I still do it. Like, what is that? I get questions all the time, and I'm like, God, guys, why don't you just check Google? You know, what's the difference between a growth stock and a value stock? I just Googled it before and saw the textbook definition of it. You know, it's an evolving education, and it was a topic that I had earmarked for last time that I didn't get to talk about, discussing how necessary it is to be an analyst, right, to succeed in the stock market. I can tell you guys, in my experience, there's been a lot of things that I've identified in what works with stock picking, all right, for lack of better terms, and investing and using your different pillars to strategize and build wealth over time. All right, it works. All right, and I will tell you that the key to that has really very little to do with technical and fundamental analysis on stock. All right. It comes down to, if you want to learn about a business like Raytheon, for example, or Northrop Grumman, or a Union Pacific, or an Owens Corning, or some of these great businesses that are out there that don't get talked about very often, Ingersoll Rand. I checked valuation. I ran a screener through my brokerage on Merrill Edge, and I just checked the PEG ratios on every stock right now that's less than 1. I would highly encourage you guys to learn how to do that search, all right? You're going to be amazed at what you find, all right? Right. Typically, the PEG ratio that's less than 1 is going to demonstrate that a stock may be a good value, all right? Is it a tried and true law? No. But you would have seen that Alibaba, right, dipped below 1 briefly. And that really was the trigger point for the buyers to step in and take a stab at Alibaba. Baidu took a big point up. I'm a couple points away from going back into the black on China Mobile. I'm satisfied with that. I may look to liquidate that position. But that is a very, very interesting key. If you can learn to get on there, I may do a video on that, just walking you guys through how to set up those. It's the research function. And I know every single one of the trading houses have this function to basically filter through stocks. It's a stock screener, basically. And you can ask the stock screener to eliminate every stock in your search and just show you those that have a PEG ratio less than 1. Very interesting. You're going to find companies like Daimler Chrysler. You're going to find companies like Citigroup. You're going to find some companies that are less than 1, and they're probably, and that you got to be kind of careful, because anything less than a half, you got to look at the fundamentals and make sure that they're not a struggling business. All right. But typically, you know, the PEG, price to earnings, compared to its future growth, right? The PEG-E adds the dividend yield to it. But very important to understand. If you can understand and do a little bit of self-research on the stock market, that'll be a key one. But I'm going to tell you, being an analyst is not necessary, because a lot of these screening tools that you have on your platform, they're going to do a lot of the work for you. All right. I'm not one of those folks that come onto YouTube and tell you you need to dismiss all analysts. Okay. Look at what they recommend That's all they're doing is recommending something. Does this sound familiar? All right. I'm interested to know who's recommending what and why. You know, why are the majority of analysts recommending Netflix right now? I would never buy it. That's the only stock out of the FANG that I'm not interested in buying. All right. Really, none of them call for a good valuation except for Facebook and Google, to be honest with you. But being an analyst it's not necessary for your success in the stock market, okay? And I would go further and contend, how much research do you need to know if you're interested in owning Home Depot, right? How much of an analyst do you need to know? Pull the financials, right? Look at the balance sheet if you want. Look at the recommendations. Look at its 52-week range, right? See where it's at and buy the stock, all right? You're going to win long-term with a good company like Home Depot. We offer a ton of those examples with kind of that in mind, to know that if somebody really doesn't have the fortitude to look at a stock chart, to take these recommendations and really look at them as potential products to go in these accounts. All right. So welcome to everybody. So glad to have you guys in the group, man. I got a killer group tonight. That's awesome. I'm going to work down these questions. If it does jump around, I do apologize. I try to be as engaging as I can. But that was a lot of good work here, man. I got a couple of folks in the community here that I'm going to reach out to this weekend as well, and we're going to have a one-on-one session. Those are a lot of fun. That of which I'd like to film those one day, because that's where a lot of the magic happens, to be honest with you. And I know those folks appreciate that. It's really, really a lot of fun, man, to get that going through. So I've got Joseph Prack in the line here. I've got Bob Wright. He says top of the market, caution. Okay, exposing new stock market money right here, unless you're starting your amount, okay, I would be cautious. If you've lived through the volatility and you've went through this upswing, I would be cautious with any new money going into the market, okay? Probably a stock picker's market at this point. Buying into ETFs is always advisable, okay? Best time to get invested in the stock market if you're starting is yesterday, all right? I don't believe in timing the market in that regard. I would never tell somebody, hey, wait 6 months and then you can start your account. That's silly, right? What I would say is, if you're looking to start your investments, we provide you those accounts so you can scale as little money into the stock market with really no penalty as you want, okay? So take advantage of that. If you're taking advantage of First Trade, for example, with no minimums, right? You can buy as little as you want. If you're taking advantage of M1 Finance, you can buy partial shares. You can take advantage of their model portfolios, right? So use those examples to your benefit, and don't overexpose at this point, all right? Because eventually, when we all live through a correction together, or we all live through a recession together, all right, there will be a point during that recession where I will say, put all your dry powder to work now, okay? And that's an attempt to look at what the market is doing at that particular time and buy at the low, all right? That's just what you do. It's strategic buying. I believe in it. I've done it my whole life, and nobody talks about it, all right? Strategic buying. I do it every month, all right? I'm buying and selling stock every month to manufacture positions in the portfolio. I've still got my long positions. We've got a big earnings week next week. It's big. All right. UTX, Intel, Starbucks is probably the top pick of the live stream right now. If you guys are interested in a growth value stock, look at Facebook. The setup is quite nice. Excuse me, not Facebook, but Starbucks. Look at the setup there. That's probably something that's worth looking at over the weekend to make sure that you can get into the stock, because I do believe it's probably going to jump on earnings. All right. Really cool to have a ton of folks in the group here, man. We might break 100 tonight. Appreciate everybody's time on a Friday evening. I'm going to try to sell out tonight, give you as much as I can for your time and making your way in here and not hitting the bar or the club tonight. So I opted not to do that. So I'm really glad to have you guys in the group here. So I've got Doug Whitaker, who took 10,000 position. I was kind of looking at the same thing there. That's pretty aggressive. He's a winner on those and puts in a lot of research, I will say, on those stock picks. I know he doesn't just throw darts at a dartboard. I know he follows those things and feels comfortable taking those bets. But I mean, I think he would agree. Even that's a good score, but the risk. With the risk comes the reward. That's the nature of the stock market. But at the end of the day, I freaking like, winning trades. It's good stuff. I've got Becky, who says hello to everyone. Very cool. I got Bob in the group. Let me scan down here. I had a couple really good questions I wanted to get to. I've got Avi A here. Of course, Brenny says he slept well. I don't believe it. I think we changed his life a little bit. Great week. Added to Google and Blackstone, Roth, Square, and Etsy. PayPal in the payment space is a good one. I added Etsy with my mad money. That's interesting. This just be kind of careful dabbling. Growth has been on kind of a tear. I would just say in the payment space, I own Visa. I like PayPal as well. PayPal is just a killer. Those would be my top two. And then number three would probably be MasterCard or American Express. One of those two major players if you were going to add a cornerstone in the portfolio in the payment space. Visa being my absolute favorite for sure. So thank you for offering that, though. I actually like those stock picks being thrown in there, what you guys are doing. Here we got kind of into an age discussion. Everybody was making fun of me for being 41 years old. So snowstorm's coming. That's right. So Friday night, I can do a live stream for you guys. And then, of course, I'm going to continue working on I'm at page 105 in the project for you guys that don't know. And it'll be a fun project to finish up. I'll be offering that chronicle to you guys. You'll enjoy it. It's pretty amazing. I get kind of emotional recalling some of those hard times I went through up in Alaska. Man, no doubt about it. It's not for the faint of heart. So a lot of fun. I'm having a lot of fun writing that. I kind of get into my zone about 6-8 hours, both Saturday and Sunday on my weekend. So no rest for the wicked at all. I'm a big Ozzy Osbourne fan. So no rest for the wicked. We throw down, we keep working. I do sleep at some point, but I'm cruising down the list here. There's a couple things here that I wanted to address in the live stream. Did my fishing in my 20s too in the local bars. It's awesome, man. I'd be surprised if you didn't still do that, man. Good stuff. It's good to have you in the group, man. Nice to have you. I've got Terry Harris here from the beautiful, beautiful country, New Zealand. Awesome stuff, man. Matthew Meyer says this effing guy, he's still on here, man. He's got the persistence, man. He's got the persistence to take abuse and fire on. Yeah, that's right. We solved that problem. We trimmed the fat away. So contrary to both sides of the house and my decision making there, that's what I decided to do. So that's what we did. I want to cruise down here. Oh, there we go. There's the jump. It just opened up to a ton of different stuff. I just saw Brent here as it just popped down. I had somebody say, I don't know why I don't engage with the audience more. I actually follow it down and then it plops all my questions into my live stream. I'd love for them to fix that, but I don't know what their problem is. It does it every single week. So I did see Brent hop in the line here, man, certainly. So good to see you. As always, give my shout out to Brent. And here's Lydia. So that's really cool. I saw she just uploaded her portfolio review. So that's pretty awesome, man. That takes some confidence. And, I think people really do appreciate it. I don't personally see the big deal in it. But kudos to you for doing that and kind of showing people, what you're able to grow in your two different pillars, the M1 success and the Robinhood success as well. So it's kind of cool that people get to see actual dollars invested. If it was somebody that was brand new in the stock market and they're hearing about all these accounts and products, it's really kind of cool to tune into a channel like that and watch what somebody's actually doing. I mean, there's no minor league investing. It's the big leagues or go home, quite honestly. So very cool to see you in the group here, man. Awesome to have you. Let me cruise up here. I had a couple questions here I really wanted to get to. Yeah, so Brittany hit me up, and this is an interesting question. I do get this quite often. Ryan, do you think people should invest in stock or real estate? I've done both, and I can tell you the level of overhead that it takes for real estate really should be acknowledged. I think there's a lot of people getting involved in real estate in over their head. I think just because they approve you for $500,000 or they approve you for $250,000 doesn't mean you have to go out and spend every penny, right? Just be a little bit careful, a little bit different animal. You know, if a stock market goes up and down, and it goes up and down much more frequently than the real estate market, but the real estate market can dole out some pretty good pain as well. If you guys knew 2009, 2010, and 11, I was moving to Detroit at that time, all right? It seemed like every other house on every other block was being foreclosed upon. And of course, the opportunistic Ryan, you know, goes up there and buys a house in the midst of all of it, all right? Not one person said, hey, good job, you know, or smart move. You know, they said, what are you doing? Your house is going to be worth nothing next year. And that's typically the time to buy. Conversely, you know, we moved here to Virginia, and I thought that the market was relatively inflated. That was just my feeling, right? So I did not take the leap of faith for real estate, and stock investing was good enough for me. I will say this, stock investing, the entry or barriers to entry don't exist anymore. There's no excuse at all why somebody can't find their entry to the stock market in some form or fashion, all right? I found mine and started as relatively low as you can possibly go, 25 bucks a month. That's as low as you can go. If there's somebody out there that has that 25 bucks a month, and something that really, really helped me understand that is this right here, learning to separate from your money. And I always run this wallet test. This is the funny thing, is if I went and grabbed my wallet right now and showed you guys, there's zero cash in there. Zero. None. Zero. I never keep cash in there. Never. I don't care to have cash on me. I've learned to separate from my money and have multiple buckets. Right? Why do I do that? Why is it psychologically more so? Because everybody in the community is going to say, come on, you got to have 25 bucks on you for emergency. No, I don't. No, I don't. Not in this country, I don't. Forget it. If I was in a third world country, maybe I still wouldn't want to have cash on me. As long as I have air and water, I think I'm good. I really wouldn't even want to have cash on me. But it's the psychological piece of being able to separate from, you know, this thought that we have to be able to buy our expenditures when they come across. Oh my God, what if I end up in a position where I can't pay for something? You know? So learning to separate from your money. And I have people hit me up all the time, and they're like, how much work is it to start the account? Or how do I roll over an account? You know? And it's like, guys, you're just throwing one account to the curb and switching into a new one of choice, right? It's not that big of a deal. You're just moving one pile of money to another place, all right? Certainly want to try to avoid some transfer fees, because banks that are charging you big fees, I just talked to a very nice lady this week who's with Wells Fargo, of all things, just an absolute nightmare what she's going through. Charged quarterly for her accounts. They opened 3 for her, being charged just insurmountable fees. And I'm sure they'll probably get her when she walks out the door and transfers her money somewhere else, right? A lot of the receiving financial brokers will provide some sort of incentive and compensation hopefully to provide kind of a wash for those old fees that are coming from the old, because they're going to try to get you and kick you in the butt before you leave the door, right? Because that's just what they do, man. That's how they make their money. But this is a good exercise, man, to ask yourself. If you think that you don't have $25, then you probably don't. But I'm here to tell you that you probably do. All right, it's all mental. It really is. a heck of a question on the real estate side of the house. I think it's really, really important. But with the real estate market the way that it is right now, I would say that it's more important to be saving for your future, because you can really, really get into trouble with real estate. I know everybody who has a successful real estate deal wants to talk about it for the rest of their life. But there's equally a number of people out there that either break even when they sell a house or they're underwater when they go to closing. And that is not a position that I want to see anybody in. So take your time, build your cash reserves up. Get 100 grand, get 100.5, get 50 grand in the bank, depending on your price point for real estate. Then go ahead and take that leap of faith. But for you guys that are settled into the same area that maybe you grew up in, or home is home for you, certainly you're more eligible than somebody like me who's got to get into an area for less than 5 years, get in, make it work, sell it, get out, and hope to make something, or keep it and rent it. But that's also another proposition that's difficult. You got to get property management. That's tough to do as well. I've done it. I've taken those chances, and they have worked out. But it's a little bit different. I would say yes, but in due time. And I would say that anybody, even 18, 19, 20, can get invested in the stock market for sure. So let me cruise on down here. I know I can't remember what I looked like at 41. That's funny. Let me try to get here. There was another question down here. I've got Ernest in the group, man. A big thank you for you. I tell you what, I definitely owe you a personal thank you. I read your email this morning at like 5:20 in the morning. You probably saw my response, and I just want to say thank you to you. That very, very interesting stuff. So Matthew again says, this effing guy. Maybe it's another post. Maybe it's just one. Good stuff, man. I've got Golf Fish in the group here, man. Just a loyal. I think Golf Fish has been with the Independent Investor channel since about day one. It seems like, man, very cool. And like I said about setting a higher standard, honestly, somewhat of what played into my decision was just that, honestly. But keep in mind, man, we're going to push that. If that's what you guys want. And really, I do agree. I looked at those two options as being singular thought processes. I didn't look at them as being mixed as it was taken. But certainly we're going to continue along the road of self-directed investing with the perspective and understanding that potentially there's solutions out there that can just bridge the gap. And what really made my mind up as far as my decision that I made just today was this right here. And I think what I mean by this is the worst enemy of an investor can sometimes be their self, really. If I look back over the course of my life, selling too early, liquidating mutual funds when I shouldn't have, I've always been my worst enemy. The problem is, and to give myself some credit, I really just didn't know what it is that I needed to know. And that's the responsibility that I take on, in that if somebody really kind of doesn't know, but they hear a recommendation come from me, I need to understand that they could take that recommendation, go on, put it to use, really unknowing, okay? And there's a big trust factor if I say, hey, this is a viable option, and it may be for a passive investor, right? But not even knowing the implication of the fees, honestly, was one of the reasons why I kind of looked here and I thought, you know what, I'm just going to bridge that gap for somebody. Because honestly, if you were just to buy one ETF in your portfolio and hold it forever, you could trip, fall into a self-directed Roth IRA, know nothing about the stock market, trip, fall, and buy VTI and succeed in the stock market. You really, really can. So I would rather have somebody trip and fall and not know what it is they're doing, because I've recommended that they look at that path as opposed to another path that I know there's going to be implication down the line, right? So that's kind of what I mean by this. All the mistakes that I've ever remembered in my past has been out of wanting to invest in the stock market, but really not having the foresight and the knowledge at the time of making the decision. Furthermore, there weren't really products that were available when I first started investing, like a lot of you guys have right now. So let's exploit the hell out of them. All right. We need to continue to discuss. You guys know I've had enough positive feedback on the channel that I'm going to be pushing M1 a little bit more to be looked at as that passive option. Okay. I don't think you need to be trading in and out of M1. All right. I think everybody that's part of M1, a lot of the positive comments that I've got come back, I've had some come back to say, yes, it's wonderful for a passive investor. Use their model portfolios. They rebalance automatically, okay? For a new investor looking to go passively, you need to probably look at M1 to start for that passive, all right? But keep in mind, if you're gonna go 100% passive to build up that base and you have a desire to build a separate account after you've built that passive option, then we're gonna start talking about some of the other very, very few options that we have out there. There's very few that we talk about. All the majors are good, but I've had a few people come back and say, I don't know about these smaller brokers because customer service is a concern, right? That's a legitimate concern. That's the major reason why I don't move exclusively away from Merrill Edge, right? And that means a lot to people. Reputation means a lot to people. When I transferred away from M1, Bank of America said, who? Okay, there's not a reputation. Now there's a reputation amongst us users, right? Who are on the cutting edge of identifying these products. What's going to work for us? What's going to give us the lowest cost of entry to the stock market, right? Very, very important that we keep up on the dialogue of these products. And if they start to become less advantageous to the individual investor, then we kick it to the curb and we move to the next option. It's that simple. So good to see you in the group here, man. I really appreciate you kicking in here. Pretty awesome to have you in here. Really, just an absolute loyalist to the channel, man. Good stuff. Ernest says the audio is good, man. I think I've known that for a while, but he always looks out for me, man. I couldn't ask for a better friend to the channel. No doubt about it. I'm looking forward to meeting this guy someday. No doubt about it. Mr. Bill Williams gives the thumbs up. That's awesome. I've got Christopher Blaine here in the group, all as well. In Munch for sure. I got the happy couple in the group, man. Love is in the air. That is awesome. I'm ready for tonight. Hey fellas, Nice is here. The wife has to miss tonight. Oh, just Nick. Okay. All right. Well, that's too bad. I thought you guys were connected at the hip all the time. All right. Well, cool, man. Hopefully you can engage a little bit more, but it's good to have you on the line here, Nick. Good stuff, man. K97, wonderful. When will we get tax information from M1, Fidelity, etc.? Does it usually come around next week? Yeah, it is a little bit early for that. So I haven't received mine. Please be patient on that. You guys, as an investor, I'll just let you know the secret to the taxes and investing is to make sure and connect your brokerage account to your tax software, whatever it is. All right. I may be looking at a tax solution through the channel. I'm looking at it now, but make sure that when you kind of pick your tax solution that you're making sure and pick right, because you're going to upload your information to start, enter all your information, and it's so much easier year over year to have that information already existing in there, and then all you do is account for any changes and W-2s, those types of things. So it's interesting. It's interesting that you mentioned that, but I think it's a little bit premature to be looking for that kind of stuff. I typically don't start looking for that until February 1 is when I typically want to start getting in there and doing it, but it typically ends up about February 15th or the 20th that I actually end up having all the documents that I need, especially the 1099 divs. For some reason, I don't even think banks send those out until after February. So just, yeah, be patient on that. Don't get into a rush. Take your time. It doesn't mean that you can't start it with the software, but don't finish it out until you're certain that all that information from investing is uploaded into the tax software for yourself. All right. I got Noella's on the line here. Good to see you. Very, very refreshing. Very cool to see you. Awesome. Thank you for coming in and supporting and saying hello. Awesome. I got Travis Hayward. Awesome. Awesome to see you. Going to be a listener tonight. Doug says he's not going to engage. He's happy with his fat profit. Basically, he's just going to sit back and enjoy the show. And that is well-deserved, man. Well-deserved. That might be the trade of the week right there, honestly. Going into Sears, I didn't even have the stones to play, man. It just wasn't in my pedigree to play Sears right there. It probably would have went bankrupt if I would have invested 10,000 shares into it. But good on you for doing it. Really good stuff. Hello from, I hope that's Washington. Very cool. I hope that's Washington, unless it's some other country that I've never heard of. But I've got some big roots. I'd kind of like to know where in Washington. Very cool. It's a special place in my heart, Seattle, for sure. Great stuff. Home of my favorite band. Saw CKY in downtown Seattle. That was really cool, man. Really cool to see those guys play. Avi A, profit taking might be in order soon. Really glad you brought this point up. Yeah, just I don't trust it. I don't get into this. Yay, whoop-de-doo, right? When I want to remind you guys, okay, we just went through 3 months of just absolute horror, okay? I didn't. I was fine. But I had people hitting me up on the channel telling me all kinds of different ways to invest my stuff. My portfolio is going to $100,000. You need to sell everything now, Ryan. Why are you so overexposed to the stock market, not even knowing what I have? You know, you need to do this, you need to do that, which I don't have time to do that for people unless I'm talking one-on-one with that person and we can really do a deep dive into what they've got. But I don't see those folks around anymore. So it's really funny how those folks come out when everything is really, really bad and then seemingly crawl back under a rock, honestly. Now, with that said, there's some validity to being a prudent investor now and acknowledging that it's sprung up quite nicely, okay? The majority of the time in the stock market is going to be done holding stock, okay? Don't think from day to day. The stock market does a really, really good job of making you think day to day and lose track of the long-term program that you put in store for yourself, right? It's going to be the very nature of the long-term program that lets you win out. Now, I'm not saying that some of you guys, hopefully, even living through some of that volatility over the last couple months, are sitting on some profits, okay? Don't be afraid to take some profits here, put some cash to the side. Don't be afraid to do that, okay? I'm never, ever going to fault you. And there's not a magic number. Don't hit me up and ask me, hey, Ryan, should I sell at 10%? I'm not going to give you an answer to that. If you're up 6% and you're building your portfolio and you'd like to rotate that out and do something different with your time, I just got some of that Sears profit, man. Legit. Sit back and enjoy the ride, man. Awesome. Trade of the week. I'm telling you what. Good stuff. That's like I'm the dealer, basically. You know what I'm saying? And he just hit a big jackpot and he just threw a chip my way. I love it. Thanks, man. Very cool. I really appreciate your guys' time tonight. Means a lot to me. I was feeling pretty low this week, to be honest with you. I didn't get the pulse of my message. I'm pretty transparent on the channel. And there's, there's going to be some folks that disagree with my decision. There's going to be some folks that probably raise an eyebrow at my decision. And hopefully you do, because I want you to understand that I absolutely listen to everybody that comes on the channel, even the people that, spread some hate. Because some of the hate that I got, there was some legitimacy there. And it's the legitimacy in the hate that cuts pretty deep. All right? I'm not one of those guys that needs to come on and fool my YouTube viewers. What you get is what you get. If you don't believe that, go back and watch my first video. I'm the same fella. A lot less polished, but I'm the same fella. All right? I really appreciate that, man. Doug, thank you so much. Good stuff, man. I've got Isaiah 92. He says, hey, what's up? I'm doing a little decompression, man. I've had a crazy week this week. It's been very, very busy. So it'll be nice to do some creative writing tomorrow. I'd really love to finish this project. And I will absolutely open up the opportunity for some personalized notations. I've got a lot of people in the group here that deserve some personalized notations. Once that project is done, it's going to be a killer read. It's going to be a killer book. If you've never worked out on the ocean or ventured on the ocean, or you've ever been interested in, a commercial fishing lifestyle, I take you there. I take you there as if you're there. And it's a beautiful thing, man. It's going to be one of the projects of my life. It's going to be a good give back. It'd be fun for my kids to read someday, certainly, when they can appreciate what I went through. I've got D. Sorrell in the group here. Very cool, man. Finally made the live show for my first time and not the replay I usually catch over the weekend. I appreciate you coming in. I know how busy you are, that's for sure, as I am as well. I get the kids sleeping, so I get to play a little bit online. But love the interaction, and thank you for your time coming on and catching at least the live stream. Certainly, if you've got a question about, finances, any of that, hate not to pry. Certainly, everybody kind of throws their ideas into the group here, but if there's new folks that are making their way in tonight and you're shy about asking a question, please don't hesitate. I'm just a freaking regular guy, so just talk to me. Talk to me. Let me know what you need, man. I'll throw down for you. All right. Joseph Prack says doing AOO, ABAO, and Microsoft. Yeah. We're going to talk this weekend. Certainly, I'm looking forward to that. I have to do a little bit of research on the first three. Microsoft is a little bit tough right here. The valuation at 107. Certainly a superior business, best in breed in what they do. I'm long Microsoft. I think it's a great holding in the right portfolio and the right allocation. All right. So just be kind of careful. I think you guys are taking the right step. All right. But again, keep in mind this thing. I'm not going to beat you up for buying one share of AT&T. All right. Why not? If you go with a first trade option, or if you're going with partial shares in M1, whatever you guys choose to do, those are two solutions right there. If you're a new investor and you're making your way into the channel, you need to look at those two solutions for accounts. All right. They're great baseline introductory steps into the stock market. Okay. First Trade is more of a traditional broker, a little bit cleaner on the homepage. It's going to just be a listing type of an aesthetic. And M1 is going to be more of the pie approach. It's going to give you a pie display of your portfolio. Same idea. You're still invested in the same stock market. All right. It's just aesthetically different. These two products offer so much service, and they offer it free of charge. All right. So you got to kind of do a little bit of homework between those two. But if you're going to, again, fall into the stock market, all right, these are recommendations that I don't mind you take. All right. These are recommendations that I don't mind you take. Again, do it for a year. If you're unhappy with the platform, kick it to the side, find a new one. All right. But it's going to give you a lot of bang for no buck. All right. So just keep that in mind. All right. It's really just kind of the non-investor going to an investor. I find all the time when a non-investor goes to an investor and they take a haircut in the stock market, they typically don't want to focus on the arrow. They don't want to focus on what decision they deployed, or what plan they deployed, or what account they look to invest in, what product in that account they look to go with, right? They typically want to look everywhere else except internally, all right? And remember what I said about the enemy of the investor most typically is yourself. Honestly, it's typically, and it's usually no fault of your own, but you're typically the one to blame. And in one word, I think this is why that is: being naive. All right. And these are a lot of the solutions why on the Independent Investor channel, if I throw out a term like account as the conduit to the market, right? Perk up a little bit, pay attention. All right. If I throw those solutions out there like an M1 or a First Trade or some of the major brokerage houses up there, perk up a little bit. All right. I'm not going to throw 1,000 options out there. I'm going to throw about 10. That's it. 10. And I typically talk about the most important ones toward the top. All right. So kind of pay attention if you're looking for that introductory introduction to the stock market in your account, all right? Because we're trying to give you the answers right up front, all right? There's no secrets. We're trying to be as visible as we can, putting those solutions right in front of somebody, so all they have to do is walk the path, all right? That's it. It's a great, great thing, all right? Avi, want another good one? Doug, it will break out in the next month. Finally, I got down to Lydia's section here. She finally popped in. I don't know if she's home or commuting. Keep your eyes on the road, okay? I don't want you to get into an accident on the 405 just because of me, all right? Good stuff. Somebody didn't like my 405 joke. They just left the live stream. That's too bad. Happy Friday, everyone. I got Hector Mendoza, got Christopher Blaine in the group here. Good stuff. I got Nicholas in the group, Larry again, Doug. Let me cruise down here and see if I can't cherry pick some of these questions here. I want to make sure I get to all these questions tonight, because I got accused of not being interactive enough on my live stream. I would question the devotion of certain other channels, but we don't do that anymore. Michael Raver brings up the great General Electric on its way to 20. We got to get to 10 first on General Electric, but I'll tell you what, man, I was down like 42% in General Electric. I'm down like 30 now. So we're marching the right direction. As long as it doesn't turn back around and go south, we'll be good. How about those banks? Yeah, so I'm a little irritated about Goldman. I had that one. I had that one dialed in. Now, I did take Morgan Stanley. I picked up Morgan. I did sell it this week for a profit, I might add. I did sell my stake in AIG. So somebody's brought up, hey, you should do some selling here. Those are just a couple of the moves that I made in the stock market. Just to be transparent about kind of what I'm thinking. I will tell you, I added some position to Wells Fargo this week. Picked up Bank of America, but traded out of it in 2 days for a nice profit. I'm up huge on emerging markets. I'm up huge right now in small caps. Small caps have been on a tear. Financials have all obviously been on a tear, but I was down in some of those financial positions. But yeah, Goldman's been on a tear. They really got hit because they were supposed to go under. If not, they are going under some investigation. So that's what kind of scared me off of it. And I was already invested in Morgan Stanley, JP Morgan Chase, a little bit of Wells Fargo. The biggest financial position I have is Citigroup, which I'm very happy with that performance finally. But the financials numbers really weren't that good. It's just that they had been so beat up that I think this week was kind of a relief rally for financials, which I'll take it. I'll take it. They've been really, really bad for the last 10 years. And typically that's the time when you actually want to kind of maybe look at a sector. Most of them are trading at below 10, 75% book to price. So very, very inexpensive. Probably the most inexpensive of the group is Bank of America. I think Bank of America showed up on that PE search as well. Morgan Stanley, Wells Fargo, and Citigroup, every single one of them. I think the only one that did not was JP Morgan, which I feel like is the best bank in the industry right now. And then I have American Tower, actually, which is classified as a financial. I don't really understand it. I believe it's more of a financial real estate REIT, from what I understand about their business being a cell phone tower business. But I've enjoyed owning American Tower. It gives me a little exposure to the real estate section because I haven't taken a stab at the B&Q yet from Vanguard, their real estate spider ETF. But I'm up big on every spider ETF I have, so I'm kind of a believer in that. Technologies, industrials, staples is down just a little bit. So that might be the only one that's down a little bit. Healthcare is doing quite well. Industrials, financials, and tech, right? Those are the ones I have for financials. And then, of course, utilities. That I'll never make a dollar in utilities. It's really just not my favorite sector, but I thought for exposure, I wanted to have a little bit of dab in in utilities. So I just have the VMQ in the sector spider. So I got King Hughes in the group here. It's okay to have and contribute to an employer-sponsored 401k, a separate traditional IRA, and a separate Roth IRA. Correct. No, it's not. Of course, as long as you don't exceed 6, that's correct. The last part is correct. I should have read the whole thing. And it can be beneficial for you, certainly, to take a little bit of benefit up front. If your income is high enough, it may be beneficial for you to look at doing all your contributions into traditional and then backdooring that at some point at a strategic place. But you're going to have a tax accountant look at that option for you, but it is legitimate, all right? So take that tax benefit up front, deduct those from your taxable earnings, and then backdoor the thing and swap it to a Roth later on in life if you're eligible to do so. But that really just depends on your income up to the 124,000 maximum cap, and then 130. There's a little bit of grace there where they give you a reduced opportunity to still contribute to a Roth IRA, but you may not be eligible. Yeah, it really kind of depends on what type of tax benefit you're looking. If you kind of want to reduce the taxable income a little bit and still build that Roth, then you're doing the right thing. So really good question. Yeah, lousy numbers for Goldman. I didn't see the Goldman numbers. You guys are referring to, I don't know, the stock went up. It was up over $200 today. So I don't know if you guys saw that it reported after the bell. I didn't see it report today. So if they were lousy numbers and the stock tanked, that's awesome. I'm glad I didn't buy it. So thanks. I appreciate that. Very interesting. Security tech and making quite a consolidation at the moment. I will research more. Thank you. That's awesome. Helping the community out. Doug said he wasn't going to be interactive, but he's given invaluable knowledge tonight. So very cool. I appreciate that. Just starting to put more cash in high yield savings. So Michael Hayes, this is a question that I get more and more on the channel. And interesting enough, I've been really interested in this topic because some of these high yield savings are doing about 2.5% anyway. Robinhood, obviously. I don't know if Lydia takes advantage of that through Robinhood, but that's an interesting option. Please throw those names into the group here, and that way, if somebody's looking to move some cash to the side, you might as well keep pace with inflation at the very least. So very cool. Just throw those into the group so people can benefit from those solutions, which is what I'm all about. So I'm almost to the bottom here of the questions. I'm doing a pretty good job of remaining interactive tonight, but there was a couple things that I really wanted to talk about tonight. Certainly how much exposure. I really think this is important. I get this question all the time. How many shares should I buy? And with the accounts that we're throwing out there as solutions for you guys, it's really important that you know that if you wanted to just scale into a position, 10 shares of AT&T would be at $300, right? But there's nothing that prohibits you from starting a base in maybe 2 or 3 positions, right? Making your money go a little bit further, setting those up for dividend reinvestment, and just checking your exposure level to the stock market now. With the level of the stock market now, I just really think we need to be cautious, all right, in our approach. And I really don't want to see people take a huge chunk of money. If it's a rollover, that's different, all right? But huge dry powder throwing at this stock market right here, I'm not advising. As a matter of fact, I would feel so much better if you were sitting on, let's say, $10,000 to take $2,000. You want to become an investor? Right on, man. Take 20, 25%. $2,000, 2,500. Start your position. Monitor for 6 months. All right. If you get your opportunity to buy more at a lower price, so be it. If it goes up, so be it. You're a winner both ways. But what I'm not recommending is taking a $10,000, chunk of cash and throwing it at this market. Not after this week. No way. Not after what I've seen. That's just kind of my pulse of the stock market a little bit, whether or not you should be buying or selling. And I think, again, to stress my strategy, sometimes the very best thing to do in the stock market is nothing at all. All right. So just be kind of careful about seeing this. People tend to get a little bit overzealous a little bit when the stock market does this, and it's very alluring, and people really want to just jump on board. And a lot of those people, ironically, are the people who sold in mid-December when they all thought the stock market was going to zero. Those people are buying right now when we are fostering a discussion about potentially selling or holding. See the difference? It's not that hard. It's not rocket science, all right? It's just investing. Put yourself in a position to make an educated decision down the line. That's why I said during the volatility, why are you talking about selling now? Why? All right? And nobody's talking about selling right now. Nobody. So that might be the time you want to start to introduce that discussion, or just be long it and hold your positions and not get crazy. Add to it, build cash, work on the budget, right? All those things are prudent, okay? Christopher Blaine says, I bought some Eaton Vance. Good stuff. General Mills this week. Good pick. Interesting. Very good on valuation in General Mills. Yes, Sears went to a low as the 20-cent point. That's cool, man. That makes me happy for you. You've declared some killer trades in your history with me. That's for sure. And I tip my hat to you. That's pretty awesome, man. Jesus. I smile like this because I was looking at the same freaking thing and you pulled the trigger. It's awesome. Very cool stuff. I love it. There's an infinite amount of ways to win in the stock market. There's an infinite number of ways to lose as well. So I think the idea is to try to curtail all of those ideas that we have that collectively we kind of agree on. And then again, just to kind of pulse in on what happened this week as well, there was a very, very jarring spear of information that came and said, whoa, this is contrary. If somebody is naive enough to get entered into the stock market and incur a fee like that, as low as it really is for advisory service, right? We probably need to help those people along understand that it may not be in their best interest, right? Even if they don't have the time to invest, that's not a good enough excuse. Potentially, maybe it's not even good enough for them to invest in the stock market in the first place, right? So I saw Becky just through Ally. I remember her mentioning that option as well as a really, really good savings account, an online savings account. So good stuff. So thank you for offering that, Becky. Good stuff. Value pays you back. Yeah, so there was a question up above about the difference between value and growth, and I didn't mean to blow it off. Growth, put very simply, typically does not pay a dividend. But what sets them apart in growth is comparatively across their sector, they have accelerated revenue growth. Okay, that's typically what it is. And an indication of a good value stock is typically going to be a stock that pays a good sustained dividend that's increased over time, that's not going to grow gangbusters over time. So, for example, CRM Salesforce is a growth stock. Through and through, it fits in the definition of growth. All right. Value, IBM. I may get some kickback by that, but I think IBM is going to surprise next week. We've got 18 quarters of terrible earnings, to be honest with you. And this I think this is going to be the one where they break out. We'll see. I don't know. Here's to hoping. I'll continue to rake in my 5% dividend in the meantime, and we'll see what happens. So I think it's forming a nice base here at 120 IBM. So it'll be fun to see that stock is reporting this week as well. So Brent kicked in here. Can use FinViz too for PEG ratio. I need that. Thank you. I'm actually going to write that down. Brent, thank you for that, because I've been going on to another website to check the pegs. I think I'm just Googling the stock directly and bringing the stock. I think it's up on the NASDAQ perhaps, maybe, or the New York Stock Exchange, one of the two. But that's a really, really good resource that he just provided to the group. So FinViz, for anybody that really wants to run those stocks through and check the current PEG ratio compared to future earnings, that's a great resource to do that. I've been doing my stock screener on Merrill Edge. It's actually pretty good. So give that a shot and see what you can find. It was kind of a lot to look at when I first got on the platform, but now I'm kind of starting to get back and forth and see what kind of benefits are on the platform. So good stuff. There's a bank in California that offers free robo analysis up to 10,000. Yeah, so robo advisor for anybody with Charles Schwab as well. If you're interested in that type of thing and you're interested in having the benefits that come with robo advisor, there's a $5,000 minimum in that account to do it, and they do it free of charge. Okay, so just kind of search that out for you guys that are on Chuck Schwab. I'm a big proponent of self-directed investing. I will say that I don't want to send people on a wild goose chase coming in and being like, what, you invest on your own? How does that work? That takes too much time for me. And that's really kind of what it was a supplement to time. And I've had a few people that have checked out the robo-advisory service, and they're like, this is perfect for me because I don't have the time to spend 1 second. Like, we kind of talk on the channel and the community in a lot more common language. Like, hey, just go onto M1 and just search out your model portfolio and just allocate it properly. And a lot of people don't know what the hell we're saying, you know, and they don't want to know. They don't have time. They don't have time to do it. They want to go through it, boom, 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 and they're done, and they get started and they're off and going, right? And I just think the impasse probably is to say, look, it's probably in your best interest to educate yourself up, at least from a minimum perspective, all right, and go at it after you've educated yourself up. Again, you want to trip and fall into the stock market, buy the total stock market from VTI and be done with it, and you're good. If you want to allocate some bond exposure to the portfolio, you can get that through Vanguard as well, and you're done. Pretty simple, not that hard, right? And the portfolio is probably not going to be as in line with what you should have. Maybe it'll be a little bit more aggressive, but who knows? Maybe you'll make more money out of picking a nice diversified portfolio that's a little bit more aggressive than what you have tolerance for, and you end up making a little bit more money. Who knows? I mean, there's no guarantee in the stock market. The idea is to get it as close as we possibly can. So PEG ratio less than 1, Joseph says. That's correct. PEG ratio less than 1 typically demonstrates a stock that may be getting to when they consider a cheap stock. That's what they're talking about. So TD has a great screener. That's awesome. Thank you, Doug, for offering that. Shoeing a thing and thing-a-ling, a fling, a flop, a throp, a two is in the group here. It says Disney's upcoming streaming service will probably destroy Netflix. Ooh, wow, that's a heck of a comment. Could be. I'm not a fan of Netflix in and of itself. I just think their burn rate is crazy. I think they are the beloved darling in the stock market. And when they get whacked, they'll pick somebody else to be the darling. That's just how it is. But I think from a valuation perspective, I think it's crazy. I think if you were choosing to invest in Tesla, I think you got a rude awakening today. Disney's far and away a superior pick across a lot of different metrics. Disney has done something that no other company really has done. They've been able, guys, think about when they come out with content. They can push that content out through so many different levers, you know? Netflix is building unique content that's being watched, consumed, and then lost. And they're having to put so much money back into new content that it's not Mickey Mouse, baby. Come on. It's not parks and recreation. They can't take logos of Netflix stars that they have. I'm not going to buy a towel with Sandra Bullock on it, you know? It's not going to happen. So I agree with that. I don't know if they'll destroy Netflix. What Netflix has done has been actually pretty impressive and fun to watch. Never owned the stock, never missed it, to be honest with you. I really don't care. Fun to watch. You know, the earnings showed a little bit of slow and deceleration. I think if you own the stock and you're up in it, sell it. I don't know what you're waiting for. Because you do run the risk of getting slaughtered. Michael Raver says Netflix is okay. I think raising the cost will help with some cash flow. Interesting part about that comment is I don't really think raising the price affects the stock that much. I don't think customers and subscriber base and subscriber rates of growth, they're not affected very much by that. If I signed up for Netflix, I really wouldn't care about a $2 increase in the price for their premium package. I really don't care. So I think that's a fair statement. But who knows? I mean, if you want to invest in growth and Netflix is your pony, go ahead and ride it. My pony is CRM Salesforce, and that's probably the best growth stock that I've got right now in my portfolio. I do like Medtronic as a value growth in robotics and surgical. I like that name. Certainly, Alibaba is still a good value here. I'd be a little bit cautious with Chinese right here with everything up in the air. If things don't go right with the China trade deal, we may have a really, really aggressive turn south on those names, and our stock market's going to go down as well. So just kind of keep that in mind as well. Can I wear PJs? Yes. Long Disney. Investing wisely. My brother from another mother. I apologize for not calling you out. It's the first time I've come across your thumbnail here, man. Welcome to the channel. Investing Wisely has also got an investing channel. So you want to kick in and help him support the message, man. He says, hi, everyone. And I say hello back. Very cool. Obstinate One, Sears is the only company worth investing in for the long haul. Obstinate One, man. I tell you what, you called that a long time ago. I got to give you credit, man. Maybe even over Doug. I think Doug might have taken Obstinate One's advice, invested in the stock. Now you owe him, man. You owe Obstinate One, man, for sure. Good stuff. Best time to buy in 20 years ago and today. And that's a really good comment. I really appreciate that. Mine is the best time to buy is yesterday. I don't know if it makes any sense at all to people, but it really, I understand that your long-term horizon should play into it. I also think that an older school philosophy in the stock market has just been invest what you can when you can. And I want to make sure that that doesn't get misconstrued to people taking everything that they have and throwing it at this stock market. All right. Now, do whatever you want. All right. The Independent Investor channel at best is a discussion about the stock market. All right. I'm not a financial advisor. I never want to be. I don't believe in the industry. Okay. I don't. An industry average of 3% to put somebody on the wrong track is not the right way to invest. It's not. All right. But I do agree that everybody needs to invest, but I don't think everybody needs to just jump into the stock market right away. I think there's a lot of value by scaling into the market, learning the swings of the stock market, becoming a participant in the stock market over time. You don't have to just ramrod your way into the stock market and boom, you're an investor. And then we get the first sign of a recession and you're gone. It doesn't do any good whatsoever. So I would rather see that person get used to the swings a little bit, back and forth, seeing their money fluctuate, seeing a little bit of profit in there, seeing that profit go down, just gets a little bit of practice, because it kind of comes to my, this thing you're given the test right up front. When you hit buy, you're an investor, all right? And you're given the lesson after that. As it fluctuates, what are you going to do? As volatility kicks up, what are you going to do? As people start to get on YouTube and tell you, buy the stock, buy this, buy that, are you going to buy the stock that you bought or sell the stock that you bought to buy the stock that you're being told to buy on YouTube? You're going to have to deal with that noise. The noise, it's part of it, because you're going to pay more attention to it, right? Because now you're an investor and you think that you got to always massage that investment and make it good, all right? It's not the case. All right? Let's see, what's everyone's favorite insurance stock? I just sold my favorite insurance stock, but Prudential's actually performed a little bit more than AIG. AIG I made some money with. It was fine. Took it into a pretty good downturn with everything else I had, and just went positive this week. So I decided to offload the position. So I was happy to do it. I made profit. Who cares? And move on to something else. I'm not married to any stock I own. None of them. They're there to make me money, and that's it. If you don't like Sears, you don't like America. Fair enough. Right on, man. That's a sentimental statement, man. Right on. We kept Sears alive And we lost Jack Bogle this week for sure. Yep. Awesome. The father of index funds and ETFs. Very cool. Love Vanguard's products, and I loved listening to Jack Bogle talk. He was really, really solid. Very solid dude. Aflac was another one. EGO along the insurance side. Kashif Shah says Apple has a peg of 0.99. You don't like it? I do. It's less than 1. So yes, but to have a peg less than 1 with that valuation in a superior company, Apple typically is always a buy. It's one of those crazy stocks. Like, you can research it all you want, but if you're not happy with their balance sheet, I mean, you can talk about a reduction in iPhone sales, etc., blah, blah, blah. And then on the same token, justify why Tesla is a good buy. And Apple's a buy, okay? Tesla is not an investment. It's a culture, okay? Just, you can argue with me if you want. If you want to go buy Tesla, great. I'd rather see you just go buy a car. Buy the Tesla car if that's what you want to do. But don't buy the stock, for crying out loud. That company's so horribly run, it's not even funny. All right. But yeah, no, I would like that. I said anything less than 1 is good, actually. Anything over 1 is becoming more expensive. And it's a good exercise to get familiar with and combing through, you know, Daimler, Chrysler falls on that list. Some other really interesting names that don't get talked about all the time will come up on that list. And they'll typically be the outperformers for the year. That's why it's important to invest in the entire stock market. So good stuff. Anyone else use the app Bumped? No, I haven't, but thank you for throwing that out there. I don't know what they do. First Data, FDC, good stuff. I saw Fiserv today, FISV, right, is the ticker symbol. Big merger that came across the channel. I'm watching on my mobile from the club. Nice. You need to pay more attention to the dance floor. All right. Come on, get busy. You don't need to be talking about penny stock with the Independent Investor channel. All right. Where are your priorities? You got to get your priorities straight, man. You probably got the earplug in right now listening to me. So I don't know, man. Take my advice. Get out there. Do your thing. Homo should be stock pick. Oh man, it just jumped again. I'll start from the bottom. I do need glasses. Oh no. Need Lydia's glasses. Money. We kept Sears alive and put my SY into my bank account. Awesome. Me neither, but the market reacted to it. You guys are just talking to yourself now. It's good. I'm thinking about opening an account with Chase. You invest however it's charged $75. Close up an account. Is that normal? It is. It's what I alluded to when I talked about the rollover fees to close an account. They typically do get you. I transferred out of M1 Finance and they didn't charge me anything. I was happy about that. Some of that, thank you for that vote of confidence, and I really appreciate that. Very cool stuff, man, guys. That's not necessary either, but that's awesome. It helps support my time. Very cool. Very cool. We just went into an in-depth discussion about this this week. I was pretty pissed, to be honest with you. So you got to see my honest feeling through the channel. Obviously, I asked for some feedback through the channel, and I thank you for that. I thank you for providing me that feedback. I blame no one other than myself if I was to be blamed, honestly. I do kind of give myself a little bit of a break, honestly. But it was funny. I was filming the video and I kept stopping. It took me 30 times to film that video. And I've never once did that. Never once. I filmed 250 videos on this, a lot of live streams. I have no problem coming on, talking about finances for 2 hours, almost unscripted every single time. And that was the one video, ironically, that didn't come through right. It just didn't. I wasn't speaking from the heart. I was speaking from the mind, and that was probably my first indication that probably it wasn't going to go well. And I appreciate you guys kept me honest. That's fine. And if you guys, again, if I was tuning into a channel that listened to what I had to say, I would think that there's a lot of value in that, and I do listen, and I do thank you for that. Yeah, it was a rough spell there for me at the start of the week. I was not feeling good about it, because when you put your heart and soul into a YouTube channel, I've said many times, having a YouTube channel, it's very difficult. It is. It's a lot of work behind the scenes to put the product up there, etc., things like that. And to have something like that go awry, it's not something that you want to see. At the same time, I'm not an idiot, okay? I learn from my mistakes, and I won't make that mistake again. I'm not going to promise I'm going to not make any more mistakes on the channel or in life, for sure, all right? But I've had a lot of successes as well. But we're going to get back to the grassroots, certainly on the channel, and I'm going to be laser focused on making sure that people understand their opportunity in the stock market, and again, hold my channel up to a little bit higher standard. And that wasn't delivering for me. It wasn't indicative of the standard that we're looking to uphold on the channel, man. People expect more of me, and that's fine. I take on that responsibility. I really do. But it is normal for those rollovers. Typically, the receiving broker will offer some sort of compensation, depending on how much you're bringing over, to help wash that a little bit, okay? But that's just part of the gig. Just pay it. If you're unhappy with the broker, pay it and get into one that you're happy with, okay? Ryan, thoughts on Best Buy? I love the business. Best Buy is up there for me. I've never, ever owned this stock. Never. And I can't really put my thumb on why. I think Best Buy has been on kind of a tear, so I would be careful buying it here. I don't have the stock chart in front of me, but if I did, I would probably be right in telling you that it's been on a pretty good upswing through the Christmas holiday season. I think it did very, very well. I like the stock. There's a few more in that space that I actually like better. So I would just be careful. I've been very close to buying Home Depot and Costco a couple of times. And what's the difference really between going and buying your electronics at a Costco, as opposed to a Best Buy? I don't know. What's the difference between knowing what you want to buy, searching it out at Best Buy, and then going on Amazon and buying it? I think if you were going to look at the landscape in the discretionary space and say, do I want to be in brick and mortar or do I want to be in online? I think a healthy mix of both is in order, but you got to be very careful on the brick and mortar side of the house. I think there's a few businesses that will end up doing quite well. Best Buy, I think, really does have very good brand loyalty and some staying power. I like it. I've never invested in it before. So hopefully that helps you. I would stay away from it here. Okay, assuming that, and I haven't looked at the stock chart on it, but I'm going to assume that it's run up a little bit. All right, so just be careful. He had some ideas stolen by Thomas Edison. Uh-oh. Elon puffing the magic dragon again. Yeah, he probably does it every day, guys. So don't blame the guy for that. I mean, that's just probably his deal. Thank you. That's really nice. I really appreciate that offering the channel. Very cool. Glad I came on tonight. I was actually half tempted about, and when I put quit YouTube actually on my survey, that's actually how I felt, to be honest with you. It's seemingly, and I'm not gonna belay a topic, but I will say it seems as if certain channels get a pass no matter what they say. All right. And I've always been used to being held to a standard to where I don't get that latitude. If I say something wrong, because I think I had it explained to me, somebody hit me up with a direct message just this morning and said, Ryan, it's like you were delivering, you're a chef and you were delivering really, really good meals for such a long, long time. And then you serve a bad meal and it tastes really, really bad. I was like, okay, that's an interesting way of putting it. I can acknowledge that, man. I get it. All right. And I've said many times, I try to formulate this channel to revolve back to you guys. What I mean by that is if you're taking some of this information, some of it, putting it to use, building your net worth, building your wealth, isn't that in and of itself a very, very successful channel? If we're duplicating that from subscriber to subscriber to subscriber, new investor, old investor, investor that's been investing for 30 years looking to add a layer to their portfolio. Success. Boom. Success. And I don't get on here and talk about the stock market as if I'm right. You know, I don't like, okay, let me validate that for a second. I know my program works because I have proof that it works. All right. But it's amazing to me some of the message that comes across social media that just throw stuff out there. And I actually believe that they believe that what they're saying is right. But in reality, it's dead freaking wrong. All right. So that was kind of my little bit of a rant about that topic, you know. Oh, wow. Did Jeremy make a video? Wow. Yeah, no, big surprise. Makes one every freaking day about the news of the day. Anyway, said I'd be good. Joseph says, that's what I heard on Fox Business this morning. What about the bad sheets with Sandra Bullock on them? Tesla's cutting jobs. Yeah, they got whacked today. So any of those Tesla investors, they're not good. So I'm working up here. What happened to Tesla? I probably made a video about it. I'm sure he did. Anytime the stock moves, we've got to hear about it. It's like a big surprise when a stock moves, you know. Did a swing trade with that company. Lydia, are you talking about one of those other companies? Let me cruise up here and see if I can't get into this conversation. I feel like I'm being left out a little bit. Thank you for that info. I read the same about another high dividend, Blackstone. Yeah, just be careful about Blackstone Group. Just be careful about holding it in a Roth IRA. Again, you've got some protected wiggle room there with Blackstone in the Roth IRA, but I would typically like to see that held in a taxable account if you're going to own the stock. Are you guys excited for earnings season? Yes, excited. I'm fired up. The stock market's been very, very well. Again, I just want to make sure that you're being careful. Just curious, what kind of profit are you selling for? For example, Morgan Stanley. I was up 150 bucks. I sold it. It's just this. I was up 4 or 5%, I think, in Morgan Stanley. That's it. My exposure to financials was a little bit heavy. I bought Morgan Stanley at just a crazy price. It was below $40. I picked it up, and it was a trade for me. So I took 4 or 5% off of it. That's fine. I do that because not so much that I don't believe in Morgan Stanley. I think it's a great buy right here. It's just I already have a good base in financials, Sector Spider ETF. I've already named the banks that I have, right? And my overall portfolio right now, I'm still down in a few names, and I want to make sure that if there's profit there, that I'm starting to build a little bit of cash to the side a little bit. And that's my thought process there. All right? A really good question. Thoughts on Macy's? Wow. I like Macy's. I don't think I would ever buy the stock. Just not really into that retail space. Not really into it. There's just a ton of other stocks out there that I would be more apt to buy. We've been going for about an hour and a half, guys. I think I'll crank through for another 15 minutes or so. I'm down. I'm having fun. So I want to cruise back down. Never been against Goldman Sachs. They always squirm out of any seemingly unavoidable catastrophe. Yeah, pure Wonka, right on the head there. I agree. That's why I almost bought it. Yeah, I missed my opportunity there, but I didn't see them if they reported after hours and their numbers were poor. And then I guess I did well avoiding that landmine. So Altria pays an excellent dividend. You guys saw Philip Morris. That's really kind of climbing up right now, doing really well in the low 70s. You're a great host, Ryan. Don't let the negative nannies bother you. Lydia, thank you. Thank you. I will remember you said that, and I will remind you when you're a giantly small channel like mine. I work very hard at this, okay? I don't do it for a living. I'd love to make millions of dollars on YouTube, okay? Everybody aspires to great things, right? But I think my thing is I really do put a lot of effort in the content. I believe that the content is very, very good. And I was reminded of that this week. It wasn't though I was hurt for any other reason other than that. It was as if people were saying, Ryan, you're straying away from your message. And I I agreed. I agreed with it. And that's okay. I'm a human being. I'm not a robot. I think a lot of channel creators would just say, F it. I'm going to go on and do what I mean. F them. I don't care what they say. I'm not like that. I do care. I do. And I'm not going to, I really do appreciate that, but it's hard for, if somebody says, don't let it bother you, don't let it bother you, blah, blah, blah. I appreciate that. That's all true in, in theory. But, when you've got people that are coming through that have helped you for your service to say, man, oh man, I learned a lot from you, man. And then boom, you change it and throw me a curveball, and I'm not a curveball hitter. That's a little bit too much to swallow. So it's fixed. It's trimmed the fat. I'm not gonna compromise my relationship with a great subscriber base. I'd rather have a few thousand very, very devoted people than 300,000 idiots on my channel. I don't want that. I don't. And I'm not very entertaining anyway. So let me cruise down and see if I can't finish all the questions. I'm pretty sure I got to most of them. So value is your price. Facebook at its current value could be considered value. Yeah, definitely. And that's kind of what happens. Brent brings up a really good point there with Facebook. Typically you'll see this, and I think Starbucks might be knocking on this door as well, where they grow so fast. I mean, Facebook is sitting on $500 billion of valuation right now as a company. It grew so fast, so far, accelerated earnings, but it comes a time when the earnings start to decelerate a little bit, and they start to look at how to maintain the business, how to start to return some of that value back to shareholders in the form of a dividend. Look at Apple, right? I can remember when Apple didn't pay a dividend. Now it pays a pretty good dividend. I think it's around 2.2 yield. So just a lot of examples about, the ebbs and flows of different stock as they grow into the stratosphere, and then eventually they're gonna slow down. Eventually that's what's gonna happen. And Facebook is a perfect example of one of those. So Lydia throws Yum Brands in the group. I love that stock. It's one I've never owned, but interesting that you bring it up. I almost took a stab at it a couple years ago. It was down like $52 or something crazy. It was in the 50s. And there was so much negative, bad news about the stock. I typically have to stay away from those restaurants. Otherwise, I gain like 10 pounds when I look at a Taco Bell. I honestly do. And Kentucky Fried Chicken, I can't even think about. Otherwise, I gain 10 pounds. But as far as a stock perspective, fantastic. And Pizza Hut is the other one. But Yum Brands is a really, really good cornerstone in the restaurant business. That's a very, very good stock pick to consider. So thank you for offering that, Lydia. I don't know if you're going to take a stab at it or if you've already got it. Bill Williams says, rule number 1, never lose money. Rule number 2, never forget rule number 1. Warren Buffett, that is correct. It's awesome. Thank you for offering that in the group. I'm going to get to the end here, try to wrap up and kind of enjoy the live stream. I'd like to get this on with about an hour and a half of content. That way people who review it after the fact can kind of enjoy it. I've got Bill Schultz in the line here. I'm just kind of, I don't know if you popped in here later. I didn't mean, I'm just now seeing you here. And Bill, again, I just want to appreciate your words from this week as well. Certainly some of those guys that I come down and I hit, and I recognize I tend to pay a little bit more attention, but appreciate your words, man, for sure. And Bill's the last channel creator in the group we've got. So certainly want to kick over and try to support his message. If you're looking for more information on the stock market, always try to, all 4 of these guys are in here almost every week supporting the message, that of which I very much appreciate. So he says, I own Yum in the Bumped app, but I've never researched them. Oh, interesting. Okay. FinViz, again, I have to check that out. I wanted to make a notation, but my pencil's broke. So I'm going to have to remember it, which, again, I'm 41, so I have a hard time with that. I have Yum in Bump 2, KFC, Pizza Hut, and Taco Bell. Yeah. So thank you. I've just gained 10 pounds now from reading that from Michael Hayes. Thank you, Michael, for allowing me the allowing me the requirement to go to the gym again tomorrow. That's awesome. That's what I learned on Fox Business this morning. Oh, wow, did you? Okay. Ryan, I'm going to mention again to you, since you were feeling negative, check out the Navy SEAL David Goggins book, Can't Hurt Me. It's about turning negatives into fuel, got positive results. Get the audio book. Hey, that is pretty cool. Negative. Yeah, so I don't need sympathy, for one. Number two, I am a tough bastard, okay? However, this is my favorite topic, and I came out with this channel to help people, and I was actually encouraged to embark upon that affiliate program. I was encouraged to do so, and to be quite honest with you, I was kind of tired of having people say, you got to do this, you got to do this, you got to do this, as if I was leaving so much money on the table. The interesting part about it was that had nothing to do with why I did that. And I was accused of, I had one really, just somebody I respected a lot, say that I did it to line my pockets. And trust me, I've actually told you guys what I've made from the affiliate. I turned off Amazon. I didn't make a penny with Amazon. First trade, not a whole lot more. I've made a little bit, which has been nice for recommending the option. I think they're awesome. But that's just a little bit of affiliate there, but certainly didn't do that for the money. That was not going to be my source of riches through YouTube as an affiliate program through the robo-advisor. But yeah, but you know, that type of thing, there's a difference between constructive criticism, which, you know, Bill was able to offer me some, and I appreciate that. I can take that all day. But when you come on and start to compare me to Jason Bond, I'm not really sure I understand where that comes from at all. Because I do seemingly think about all the times I've spent later at night talking to people on my computer, you know, one-on-one, helping people. And some of it I've got some compensation for, some of it I haven't received any. And that's totally fine. That's not what it's about. But that's, you know, hey, it is what it is. You live and learn, man. I'm actually very, very pleased. We're going to march on and continue to do things. I've got actually a renewed sense of focus as well, which is good for you guys. And it's especially good for any new investor that's making their way into the channel. I've got Jennifer Blaze here thinking SPY. Think no further. They're fantastic. That's one of the best S&P 500. I think SPY is issued by State Street, I believe. It's State Street, I believe, that issues SPY, and that's one of the best. You know, certainly consider VOO as well. It's got a little less of an expense of SPY, but the weightings are going to be very, very similar in trying to mirror the S&P 500. But SPY is one of those superior entry products to the stock market. Just make sure you house that asset into a self-directed account, whether it be with, you could go with M1 for that if you wanted, because it's a passive asset. You're not going to have to do a whole lot with it. So just thank you for throwing that out there in the group. And then we've got the IVV as well. That's the iShares version for entry to the S&P 500. So great place to start. Bill Schurtz says, by the way, Ryan, always feel free to email me directly if you ever want to discuss anything with me. I'm always open to talk about it. Oh, yeah, for sure. I actually know that without you even telling me, honestly. I have met some very, very cool folks through the channel. I've got one right above you, and Rebecca as well, talking about KFC. Thank you. I've just gained another 10 pounds. Speaking of very cool people, and the wealthy Doug Whitaker now sitting back on all of his house winnings. But I appreciate that. I really do. You know, it's one of those things to where I come back to this whole test first, lesson second. That's kind of how the stock market is. A lot of what I've learned in the stock market has been from freaking mistakes. You know, it is pick the wrong account. I mean, I've been with 4 brokers. I've been with M1. I've been with Merrill Edge has kept my business since 2000 well, since they came out in 2012, I've been with Merrill, but I've been with Bank of America since 2004, right? But I don't. It's not the first mistake I've ever made in my life. And again, is it a mistake really? Again, I compare across the landscape, and seemingly I see $1,000 stock market courses that they're a waste. And when people come out and they say that they're a scam, they are. They are. And people will disagree with me all day and say, it's not a scam, Ryan, until you try it out. It's a scam, okay? It's a scam to get people's money. There's no way in hell you can tell me it's worth $1,000. Furthermore, become part of a stock market club. What in the hell is that? I don't even know. And I guess comparatively across the landscape, it does. It really kind of seems like a lot of channels get the nod a little bit. Whereas mine is held to a higher standard. And quite frankly, I don't mind that. And I was reminded of that this week, honestly, and it actually made me feel good in that regard to say I kind of broke a little bit of trust with people by doing that, because I think my intent was misconstrued. It really was. Because my intent really was quite simply to put a solution there for people who don't have the time. And I had a few people reach out to me to say, this solution's freaking awesome for me. I don't have time to run your program, Ryan. I'm not interested in being a self-directed investor, right? So with those people are not going to be provided that option through the channel anymore, because I received too much feedback not to pay attention. And then I received an email again this morning from somebody who I've got the utmost respect for. And I would say that was kind of the nail in the coffin for me. And it wasn't 5 minutes after that email that I took it down. So that's kind of how that happened. But that's fine. You live and learn. I want a Starbucks. Doug, you've earned it. You really have, man. Go get yourself a coffee. Make sure that you pay with house money there. The trade of the week, Doug Whitaker in the group here for Sears. That's awesome. Thank you for sharing that. That's pretty cool. Just another example of how you can succeed in the stock market. Good stuff, man. I've got Ernesto Alvarez here who just popped in. Matt Goodman, Ryan, IRA on M1 versus IRA with Vanguard. More expenses when going through. I would definitely choose the M1 on that. And I hope I get some support from the group there. Definitely want to check out some content right below you as Financial Investor. And then you've got Lydia Santiago, which is 1, 2, 3, 4 slots below you on that comment line. Lydia also actively uses M1. I'm not that impressed with Vanguard as a bucket. I love their products. I invest in their products. That's really all I invest in along the ETF line. I invest in both their sector spider ETFs and their total market ETFs. I've got their emerging markets ETF. I've got their Vanguard small cap ETF. I've got a lot of their sector spider ETFs in my portfolio. I'm just not a fan of their brokerage house. Okay. I've never invested with them. But I think for cost of entry, M1 doesn't cost you anything. More expenses when going through. I'm not sure what you mean by that, Matt, but I think you'd be really, really happy with M1. And I want you to reach out to Brent directly right below you, Financial Investor. Take a look at Lydia's product as well. I think Bill does M1 as well, if I'm not mistaken. I don't want to misspeak there, but I think you could probably hit a home run there with M1 if you're looking to invest in the stock market passively, okay? That's a pretty good product for that. You'd really be happy over the long term because you're not going to get consumed by fees. Don't take it for granted, okay? We're putting forward a superior option for you to take a look at. So don't think for a second that, putting those products to work inside of M1, they're liberated to work going forward. So that's a big benefit in and of itself. So very cool. Lydia, you owe us pizza. Yeah, no doubt, man, for sure. We'll get it in Las Vegas when I hit my 100,000 subscribers in like 12 years. We ought to be there in about 12 years, guys. I'm going to be like 55 years old. We're going to be in Vegas for 100,000, man. I can guarantee it. I love M1 so far. Only complaint is that they somewhat counterintuitive pie system sometimes. Yeah, most of the people, I think it just takes a little bit of getting used to, I think. So is the next big pick. Look out if it falls to as cents buy, 35 cents as a buy. PSIQ, nice, man. So you guys are getting your trade for the evening. Good stuff. 500 open a Roth on M1 is too much. Yeah, I don't know, you know, for an entry investor, I think 500 is something that you could work up to and then start that account. They'll probably do away with that. I don't know why they do that, but it's worth it. It's worth it. I think if you're serious about getting investing, Nicholas, and I don't know how old you are, you know, if you're 50 or if you're 18, if you're 18, you need to buck up a little bit, become part of the independent investor channel community, man. Everybody's welcome, certainly, but you can get that, man. And that's a heck of a first goal if you're looking to get up to that. If you're talking in general, the $500 entry to M1, I don't think that's a barrier. I don't consider 500 to M1 as a barrier to entry to the stock market. I think at the very least, if you're serious about getting involved in the market, you should be able to save $500 if you're serious about it, and then exercise this separate from your money, because that statement right there kind of tells me maybe that you're still working on that, you know, getting that savings set up. And I remember, man, I was there. I remember those days like it was yesterday. The funny thing about it is I've never forgot that feeling. Never. I look at $500 still to this day as a lot of money. I do. That's just, I've never lost that perspective. And I don't think you guys should either, man. That's a lot of money to put to work, but that's a good first goal to get yourself started and stepped into the account for sure. Vanguard platform is very behind technology-wise. Sir Ernesto throws a very legit comment. I didn't want to step outside my wheelhouse there. I haven't invested with Vanguard. I wasn't impressed when I call them. So just, yeah, kind of keep that in mind. So Betterment only cost $1 to open a Roth. That is true. That's true. I would just be careful if you're going to take the Betterment option and you're going to build it up a little bit. Just don't use it to build it. All right. And if you're happy with the platform, great. If you're not, there's always the opportunity to roll that into a Roth IRA with another brokerage house. And that is true. The cost to entry is zero with them. I don't know how they can do it, but they do. I think M1, I'll probably look at fixing that in the future, to be honest with you. M1 for the Roth, Robinhood for individual stocks, Webull for swing trade. That's probably a pretty good game plan, Michael. I like that. That's a good one. I just invested into my Roth with M1. I do feel liberated. Awesome. Matt Goodman. Very cool. Yeah, I didn't know that. So good stuff. Michael Hayes, why Robinhood for individual stocks? If there's no dividend reinvestment program, that's a fair point. Honestly, if I didn't know that Robinhood did not have dividend reinvestment. So that is a reason enough to maybe look somewhere else. Nicholas S. says, I prefer Betterment for the Roth. Good stuff. I hope I'm 40. That's perfect. It may be a great product for you. You know, let us know how it works for you. Just kind of understand you can run it through that cost expense calculator that I put on every single one of my videos, and just kind of let yourself know what that expense is going to be as the account grows over time. So pretty important just to know and not be naive about. All right. We've been going for about 1 hour and 50, guys. I'm going to look to sign off here real close. If Betterment works for you, stick with it. Everyone has their preference. That's about the most legit advice, honestly. And I will close with this, guys. The stock market is one of those things to where you have to deploy every single angle that you have, every angle. And I think a lot of people, if you just put a plan in motion and you believe in the plan and it's not completely off base with some of the topics that we talk about on the Independent Investor channel, the importance of the account, the importance of the portfolio, the importance of aligning your risk tolerance with your asset allocation, and you become long on your program, you're going to succeed in the stock market. You really, really are. Where people falter is where they start to second guess their plan and start to backtrack on their plan And that's really the demise of the investor. And it happens more commonly than you think. Guys, if you made your way into here, man, I've got a lot of thumbs up on the video. I do freaking appreciate that. It was probably the roughest week I've had, honestly, in the life of the channel. No doubt. Just speaking a little bit now from here, since I told you that I had a lot of trouble speaking from here, shooting the video. And I do appreciate the support. I actually appreciate the criticism, to be honest with you. I am tough to an extent. I'm also still a human being. So I do read all that stuff, honestly, when you throw something my way, and I'm about as visible and transparent as any other YouTube creator out there, sometimes a little bit more. I do take that stuff to heart, but I do appreciate it. And I do appreciate the support. Thank you very much for making your way in here on a Friday evening. We will see you next Friday, guys. Good luck. Have a great earnings week this week, and have a great rest of the weekend. Happy Martin Luther King Day to all of you guys. Take it easy. Thank you so much.